it's gonna go. Sometimes it might not work out to either way, depending on how volatile the stock is. So let's say if the stock goes to 520 or 530 after hours, and then pre-market next day it goes down to 480 or 490. So you're burning to either side. Let's say if the ER is on Wednesday after hours and it's gonna be Thursday and Friday, you only have 1 day left if you have it for that week. Smarter thing to do there is to have it a little bit farther out. So let's say next Friday or the following Friday after that. That way it doesn't burn that bad. Um, Same thing as I said before. For like an entry, what I would do is that I would use it before earnings or big news. Like I said before, something like Tesla's new Cybertruck update or something like that. Or on the ER, if they're going to talk about the margins, you want to try to see because that's a big focus for Tesla right now. Exit, as far as an exit, what I would do is that I would close the stock. I will close it whenever the stock moves enough to hit your profit target. Example, I've said it before. It could be 20%, it could be 30%, it could be 50%, and so on. But you got to have a target. Whether the target is 20% and you're just looking to make 200 bucks out of $1,000, that's better than going red or not making any money. A lot of people don't make $200 in 1 day or overnight, just sleeping. If you want to look at it that way. You can do like a stop loss as well on any of them. You can do either like a 10 to 15% of the total premium. That way you don't let it bleed out. We're gonna go into like the stop losses in a little bit.
Don't
Uh,
forget with when it comes to major events, right? The reason you're using straddles and strangles because you expect a large or big move
Your
in either
phone breaking up,
direction.
Brody. Your
The
phone's breaking up.
premium for those
You
will always be
you're
more
breaking out pretty bad, bro.
expensive
breaking up, Brody.
compared to when
God
the
damn.
event is not
That boy on that
expected.
robot mode.
No cap.
So the cost for those contracts to be able to buy. How about now? How about now? How about now?
Good, 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 good.
Say what you just said. Say what you just said.
How about now? How about now? How about now?
You're good.
You're better. You're better. Say what you
All
just
right.
said, brother.
I want you guys to understand, right? When you know you're using a straddle or strangle strategy, that means we know a big move is expected. So an event is occurring. So just like he was saying, maybe it could be delivery numbers, maybe it could be earnings report, whatever it is. If we know that a big or major event is going to occur, that means the premium or the cost to be able to buy the contracts will be expensive. They're going to be juice. They're going to be more expensive than what it normally is, what you would see for those contracts. Always remember, you can always do something where it's about 3 weeks prior to earnings or certain events, if you know when it's happening, before that contract prices start increasing. It's called, for me at least, I call it a pre-earnings run-up. So the contract's value starts to increase as it gets closer to that event. Instead of you getting IV crushed and waiting through the event, you can make money from it actually getting closer to that event. So the stock doesn't even have to go up or down. I'm sure you've been in a call and a put, and then they're both moving. They're both green. You're like, wait, how am I green on my call and my put? Because of the implied volatility changing. So remember, prior to an event, it will be more expensive when it comes to the contracts or buying into those contracts. But you can take advantage of that free movement of the premium. All right, go ahead.
No, you're good. I don't know if anybody has any questions about the straddle and the strangle. So we can
Any
move on from that.
questions? Does it make sense, guys?
Just an observation for the straddles.
Mm-hmm.
It would obviously be better if you buy the strike prices at the same distance. So, for example, if the price is currently at 500 and you're taking a put for, let's say, 505, you're taking a call for 495. Both of them basically should have like a $5 difference in between.
No,
right?
so you can do it that way. That are you talking about a strangle or a straddle?
A straddle.
Okay,
Because you
so a
said
strat
straddles are where they have different strike prices.
no, so the straddle is the same strike price. You want to do the call
Oh,
and the put at the
strangle,
same
sorry,
strike.
strangle,
Yeah,
sorry.
the strangle, yeah, you can do yeah. So all right, so the higher you go or the farther you go out of wherever the stock is right now is the cheaper that contract is going to be. But they do that for a reason, right? Because they don't think I mean, it's not about what they think either, but they don't think in their mind the way that they're pricing it, unless it's got like a lot of momentum and they just want people to pile in and just either make a lot of money or lose a lot of money, they put the premiums pretty high up. But the farther out of the money is the less expensive the contracts are going to be because they don't think it can reach $10 or $20. So if you're doing 500, right? If Tesla's at 500 right now, and you say, all right, I'm gonna do I don't know $40 out of the money and to the upside, so that's by 40, and then you're gonna do 460 to the downside, which is $40 as well to the downside. So that would be a strangle. That would be a strangle. So yeah, you can do $5. I would do $5. I would do possibly $10 depending on what event it is. But I like to with those type of events, I like to play it more closer to the money and then a week out or 2 weeks out. That's what I would like to do because that way you give yourself time for it to actually correct itself after it corrects itself on that ER day or that announcement day. So we've seen it with PMI with Chicago PMI or Michigan PMI yesterday or the other day or whatever, where I mean I didn't even know it was coming out. I don't know. I don't know what I was doing. I'm usually pretty good with the reports that come out, but the stock went completely down. The SPY, the ETF, the whole market went down. It tried correcting itself, and it was starting to correct itself, and then Trump came out with the tariff stuff, right? So it just sank after that. But after that news, it had a pretty far correction after it went down. I think it went down to what, Nico, 601 or 602, I think, at first, something like that for SPY, and then it bounced all the way back up $2. So it was actually starting to go back up again until Trump hit it with the tariffs again. What I would do, yes, straddle or a strangle. If you're gonna do a strangle, the options are gonna be cheaper, right? Because you're doing $5, $10, $20 from whatever the price is at that moment. But you have like your chances of actually profiting uh your chances of you profiting kind of diminish a little bit because you're not so much in the money anymore. I don't know if that makes sense, but I don't know if you have a question about that. Cheaper would be the strangle. That's the cheaper one because you're not in the money. Anything that you purchase in the money is going to be more expensive. The premiums are higher. That's why when you go into Tesla, you can go into Tesla right now if you want to. You go look at the options. If you see Tesla, I don't know, it's at 370 or 380, 360, whatever it is. Go to the same strike price that it is right now. You can do a put or a call, and you're going to see that it's really expensive for next week. Now, as time goes by, each one is going to go up or down, up or down, up or down. So if it goes up if it goes up and you have calls, you're going to be farther into the money. So you're going to be in the money farther up. So your premiums are going to start increasing, right? So whoever catches Tesla on Monday, and let's say you're already in, I'm just going to put an example. Let's say you're already in. You have I don't know, you have just an example. Let's just say Tesla, to use the same example that I have right now, let's just say Tesla is at $500 right now. I have calls. I get calls on Monday for $500 in the money, and then Tesla goes to 520, right? My premiums are going to increase. By Tuesday, it'll be 520. My premiums are going to increase maybe 100% or maybe a couple 100%. I don't know. I'm not sure how it's going to go. But the people that are going to be buying on Tuesday, they're going to be buying the same premium but higher, right? If they want to buy the 500. Now, if they buy the 520 or the 530 or the 540, whatever it is at that point in the money, then obviously the premiums are going to be higher at that point. So that's just the game that it plays. So if it was me, if I'm playing with a lot of money, what I would do is that I would do a straddle, right? I will do a straddle in the money. That way my money is a little bit safer. Now, if I have a smaller account and I'm looking to make some gains a little bit quicker, then I would try to do a strangle, but a little bit with a little bit more time. So like a week, 2 weeks, depends. Nothing too close because of the volatility. It also depends on the stock. Some stock move pretty fast. You guys have seen PLTR. I think there was a contract on Monday. No, there was a contract. Yeah, there was a contract on Monday that the $100 strike price was 56 cents or something like that. And by Thursday, that same premium for $100 calls expiring on Friday, which was yesterday, was I think $17 or $16.15. So that goes from 56 cents all the way to $16 if you would have held. A lot of people wouldn't hold that position after it went
So
200,
$56
300%.
to 1,700, or yeah, $56 to 1,700.
So, yeah. But yeah, to answer your question, Brooklyn, that would be which one is cheaper would be the Strangle would be cheaper. um, Let me see here. Stop loss. So I went over the exit. You would take profit at 20% or 30%. That's where I would take profit. Obviously, in a lot of places right now, we've been seeing a lot more gains, like 100%, 200%, 1,000%. Don't be greedy. Just take your profit. There's always going to be another trade right around the corner. We're gonna start posting a lot of trades, so you're gonna have a lot of trades to choose from. Make sure you do your math. I mean, not your math. Make sure you do your homework and know which one you want to take because more than likely there are going to be some very interesting trades coming up with how the market is right now. Stop loss, I would cut it anywhere from 10 to 15% of the premium. Okay, so if if you bought a contract at $1 at 80 cents or 75 cents. If it goes below that, you should be cutting. Don't get emotional. You're not marrying it. You're just trying to trade it. Some people hold it 50 cents. I do that a lot still. My portfolio is a little different. But if you're just starting out and you're trying to make money, don't hold it all the way down because you're going to see yourself upside down very quickly. And it's kind of hard. It's kind of hard to get to dig yourself out of the hole. It is a big relief once you go 50% down and then you go all the way up to like 10%, 20% green, or even 100% green after you've been down 50%, sometimes 60, sometimes 70% down, and then you go all the way. But myself, I wouldn't preach that. I know there are some plays that have a setup that still have the capability of actually going up and making the move. But me particularly, I like to just cut my losers quick. Sometimes I cut my winners kind of quick and I leave one running. That way I'm guaranteeing myself a chance of making more money on that. Sometimes the trade is there and there's no reason for me to sell it, so I just let it go and it just keeps on making money. And as soon as I see one or two red candles, then I let it go and cash out. Um, I don't know if which part do you want me to repeat?
How much of the what percentage of the premium should be the stop loss once it goes down?
It depends on you. Nico might have a little bit of a different idea of that, and also depends on the trade. But me personally, I would do. It depends on also your portfolio, how much loss it can take, like your risk assessment, right? So me personally, depending on what portfolio I'm dealing with, if I'm dealing with my mid portfolio, then I like to do 15 to 20%, or sometimes even 10 to 15%, depending on the trade that I take. So if it's a regular commons, if it's a common stock trade, meaning that I'm just grabbing the shares and I'm not grabbing on options, I like to just stay around that 15% range. If it is an options call, sometimes I can do anywhere from 25 to 30%. It depends. Okay. Again, some people, if you're starting out and you have $1,000 portfolio or $5,000 portfolio, you got to do the math. 10% on 5,000 is 500. So that could be a big hit. 15%, so on and so on and so on. 20%, 25%, it's a big hit for some people. So you got to put your own risk assessment. If you feel like if you feel like you need it and you can't lose it, put a stop loss. and then just don't worry about it. Next day or a little bit later, you'll find another trade and you can probably make it back. You might lose some more, but at least you're actually playing your odds a little bit better and you're not just sitting there waiting for the stock to go back up or maybe even losing more money. There's a lot of variables on that. It's not just put 10, 15% or 20% and forget about it. You got to look at the trade as well. Some trades, they go down, they grab some kind of they grab the stop losses. It's called the stop loss raid. All these stock people, they know where the market places the stop losses. It's not, it's even been said by experts. So sometimes, they come down right where people have them. They take them out and then they bounce the stock right afterwards. Same thing when it goes up and then it goes back down. So that's kind of how it is. Yeah, tight stop loss is good. Sometimes you can be in a little bit more loose depending on the trade, depending on the stock, depending on what kind of catalyst it has coming up. Catalyst means what kind of news it has coming up. How is the momentum for the stock? What's the vibe? You gotta look at the vibe of the stock. Tesla is notorious for turning people upside down and then dragging them around and then going up again, going down. That's one stock that is very volatile, and it's mainly because of the CEO and everything that it does, everything that he does. Um, so yeah, I mean, any questions on that? I'm gonna repeat it one more time, just really quickly, just summarizing it. So um, so best time to do a straddle versus strangles, right? So straddles is if you're confident in a big move, but you're unsure of the direction. Okay, so like earnings, uh, any type of news that's coming out. I don't know. Elon is about to speak. Uh, Trump is about to speak. That's for like SPY and SPX and NDX, etc. Um, any CEO is about to speak pretty much, or they're about to be on CBS or CNN or Money, Yahoo, whatever, financial, anything like that. Those are when you use that. Um, for strangles, you just want lower risk, but you need the stock to move more. That's why you're taking, let's say Tesla is $500. You're taking, you're taking a put for 485 or 490 and a call for 510, 515. But always do the same. So if you're taking a put for 480, that's 20 points, right? You're gonna take a call for 520. That's how it would work. We're good with that one? Let me know in the chat if you can, if you're
Thanks,
good with that
guys.
one. All right, cool. Nico, you want to go over anything? I got like a couple more, but it's up to you.
Do you guys have something specific? You guys know we could talk forever, but I just need a subject. Y'all can unmute yourselves and talk. We got 15 people on here just sitting quietly. It's like we all in a room just looking at each other.
It's dark.
Anything someone confused about? Not
I guess
sure.
I have a
want to talk
question.
about
Boom. There we go. Who
Yikes.
gonna want to go first?
You can go first.
No, you could go first, Courtney.
Someone had mentioned in the chat entries and exits, so I guess we can't go wrong talking about that one.
No, we cannot. So I'll go over entries and exits. Ashley, what was yours also before I start?
I guess mine does fall on the entries and exits because I want to talk about what I did on Friday. Basically, like I read the chart, everything looked good, and then everything wasn't good.
Yeah, it is what it is. That's the same thing happened to me on Friday. I mean,
I
I
think it
was
happened to a
on.
lot of people, but
I
it's
don't think.
just like
Yeah, I don't think that was controllable on Friday because there was a lot of things that happened on Friday, like a lot of events that took place that you
it
have no
happened so
control.
fast.
Yeah. Yeah. No, no.
So when I say that we have Trump in office and I say it's a good thing, I mean it's a good thing that we have volatility, right? When we had Sleepy Joe, we kind of really knew what was going on in those opportunities. The type of moves that we're getting now is ridiculous, right? As soon as tariffs get mentioned, market plummets. A little bit after a while, it kind of settles down because remember, news only lasts for so long. So after the news kind of started settling down, and then other countries are doing this and reneging and this and that, right? So they're like, oh, we're gonna put tariffs on you then, right? So different things going back and forth. There's so much opportunity that we can take advantage of.
On Friday, like so you guys know I was trading NDX on Friday. It was just like it just kept going down the whole day.
Mhm. Plummeting. It would literally go one leg down, trade a little bit sideways, and then another leg down even more, over and over.
Yep. And I think Monday is
Another,
gonna be looking crazy.
yeah, another one of those again.
Yep.
So for now, I think we are definitely in a bear market, right? We see the movement, we see the action that's going on, we see what kind of news that we're getting. Until we really get something specific, let's say if it's AI related, for him to help with AI and different things like that. Companies like NVIDIA and our major companies that we normally focus on are going to keep
No, we got Robot Nico again.
over and over. What? How about now? How about now? Yo,
Yeah, better,
yo,
better.
yo. All
Better, better.
right. I was about to say, if anytime I go robot, just take over. So with us, with you guys trading NDX, SPX, SPY, it's much easier for you to see what is going on in the market and the action that we're getting. On Monday, I think it was last Monday, Queen had jumped into an SPX call, or no, an XPX put on Friday, and she swung it over the weekend. It would cost $750. She made 9,000 from that. That same move, if she would have had NDX, now that was already an amazing trade, right? That same move with NDX would have been instead if she spent 3/4 or 1/4 of that, or even like 1/3 of that, $250. She spends 1/3 of that, 250. She would have been able to make 18,000 with that same exact move. So it's very good to understand what we're getting ourselves into when it comes to this news. Of course, we can't time it perfect, but what we've been seeing is the market either opens up or down. It's one of the two. It's either already up or already down. It's not going to open up just sideways, right? Even if it's a weekday or weekend. So when it comes to the news, just be careful with what you are trading. NDX moves quick. I know you guys see that. Any moment that it's trading sideways, you're losing money. Any moment that NDX, SPX is trading sideways, you are losing money. So make sure that you're quick when it with the entries and the exits. Now, going over entries, right? We need more than one confirmation in order for us to get into a trade, right? We need more than one signal. Let's say if it's the RSI, let's say if it's news related or news based, we need more than one reasoning for us to jump in. A few of you guys already know about your checklist, right? I'll send one out for everyone in the Discord so that they have a checklist that they can go based on. Of course, everyone's is going to be a little bit different, but based on what you see, what checks off for you to be able to jump into this trade. Am I getting a golden cross or a death cross? Am I touching an EMA, right? Is am I touching my support resistance? Am I rejecting or breaking through my support resistance? Am I retesting? So that full checklist will kind of at least help you with finding your reasoning on why you're jumping in. What I recommend for everyone, just
That boy done faded away.
He faded away.
Hey.
like
Yeah.
how you guys look for me to post.
Yo,
Don't be afraid to ask. Breaking up, breaking
yo,
up.
brother, you kind of faded away right there mid sentence, brother.
I'm back.
Yeah, you're back. You
Yeah, you
just
bet.
like a
All
little
right,
bit
so
before that, you kind of faded away.
don't be afraid when me, ECMoney, and everyone else in staff, for example, post our trades and you wonder why we jumped in. Don't be afraid to ask why. The reasoning is we want you to be able to make those trades on your own. Instead of you depending on us to actually go ahead and find whatever trade it is, it'll be easier when you understand why we jumped in. Do your own due diligence to have a reasoning on why you're going to follow our trade. If, let's say, some news came out, boom, you see it start to break past your resistance. That's more than one confirmation to say, all right, I'm getting into my trade. I feel confident. If you know that price is dancing around a certain area and finally breaks through, all right, I have my reasoning on why I can jump into my trade. Don't just jump into the market and just throw anything out there. Use what has happened before to see and understand why you're jumping into the trade also. Make sense?
I heard you. Need
Perfect.
that checklist, brother, to understand why I'm getting in and out. You know what I'm
I
saying?
got you. The exits is a little bit different, right? It
Me
changes.
too.
I got you. The exits are a little different, right? Understanding when you see profit, I really literally say this all the time. What's crazy is on Friday, when we were up 175%, I was putting in chat, hey, make sure you're taking profits. Hey, make sure if you're up, you take your money. Hey, anything can happen. And 5 minutes later, we dump lower than life, right? As as price is going up, make sure if you have more than one, take money off the table, sell some. So now when that big event occurs that you don't even know what was even happening, at least, well, to be honest, what's crazy is it was Michigan reports and it was on the economic calendar. So we would have all knew that something was expected at that time if we all just paid attention to the economic calendar. That's why we posted.
I ate that pretty
I didn't
hard
even
too.
see it
So.
until after. Me and EC was like, "Oh shit, is that Michigan?" Yeah,
I was literally. I think I
was.
was down like 4,200 in like literally 2 seconds, 3 seconds.
Instant.
Yeah, it
Instant.
was pretty bad. Yo, can you guys see my screen?
Yeah, we can see it.
All right, cool. All right. So, which one can you see? You can see the chart, right? The Tesla chart?
Yeah, we see
Yeah.
the Tesla chart.
All right, cool. All right. So, you were just talking about exits, entries and exits.
Yeah.
Okay. All right. So I'm gonna kind of piggyback off of that a little bit too. So for entries, for example, like what I kind of, I mean, it's very simple. Everybody should know this by now. Some of you might not, but I'm just gonna kind of touch base on it again. So let's do like an example. Okay. So Nvidia. Let's just wait. Let's just see if we can wait for confirmation. I like to wait for confirmation a lot of the times, depending if it's like a day where I'm expecting them to report or something like that. And then I'll just do what we were talking about before, like, I'll just do like a strangle. Now we want to wait for confirmation. Confirmation is not entirely not really what a lot of people think, right? So let's just take this chart for example on Tesla, okay? And actually, let's go to like a 15 minute, 15 day for the week. right? So if you see here, let's just do this one for example. Okay, so first of all, my blue line is the 90 MA. We went over this on the last Zoom. My blue line is the 90 MA. It's called the Legacy EMA. So exponential moving average. They're all EMAs. The purple one is going to be the 50 EMA, and the 200 is going to be the yellow. So the 200 EMA is the yellow one. Okay, and as you can see here, it respects that pretty thoroughly. Now, it depends on really how you want to trade. Okay, if you're trading long, you can do, let's say, like the 50 passing the 200 EMA either up or down. If you're trading intraday or just swinging, you could possibly do the 90 MA, just crossing the 50 up or down. Okay, so a perfect example here of a rejection, I will guess. Let's see here.
I have a
Mm,
question.
mhm.
You said 9 or 90?
No, 90 MA. Some people use the 21 EMA. That's a good one too. Or the 21 MA, I guess, or SMA. I like to use the 90 EMA, the 50 EMA, and the 200 EMA. I'll show you why in a little bit.
Okay, thank you.
No
EC,
problem.
can you
So
repeat what you just said about trading in intraday? What line crosses?
yeah, so you have a short term momentum when it comes to breaking EMAs. If you're looking at uh there's a short term bullish, and then there's short term bearish, and then there's a long term bullish as well. So if you're breaking all the EMAs and you're above all EMAs like early on, so if I put this chart like at 9:30 in the morning, and you see, I don't know, Tesla going up like crazy in the first 10 15 minutes, and I'm on the 15-minute chart for that very same day, for that day, not for intraday or 5 days or anything like that. You're gonna see all these EMAs that if it's going up like crazy, Tesla's gonna be above all these EMAs. I'm gonna try to find an example in a little bit. Just the same way that this one here, if you look at this red candle over here, this one is below all the EMAs, and it stays below all the EMAs except for this part over here. Over here, it tried going above the 90 EMA, and then it just never made it to the 50 EMA. It just stayed down. Over here, it went above the 50 EMA, but it rejected off the 200 EMA perfectly here, right? So if this is the rejection here, and you see this line, let's say we're in this trade. I'm kind of get going off track here, but I'll just want to explain it to you a little better. So let's say let me see. This thing keeps on dropping down. I don't know how to freaking take it off. All right, so we're on the 15-minute 5-day, okay? Which is it allows me to see 5 days of the week, and it's 15 minutes of the chart. That's why you see some lines here. It means that um all these right here is when the market start, when the market started, when the market is not going. I think I took off the market, pre-market and after hours. But going back to here, if I'm in this trade, right? And I say that here was my break point, which is the break of 90 MA. This candle here where my mouse is, right? If I'm saying, let's say Tesla here was at, when it broke, it was at 370. I'm gonna say, okay, shit, this thing broke. You know, it broke my 90 MA on the 15 minute. That's the time frame that I'm trading off of. I'm gonna go ahead and get like some calls because it broke, right? It broke. It broke nicely. The next candle was this one. It stayed above the 90 MA. Okay, that's fine. So we're trading literally for maybe 30 minutes or an hour, if you want to call it that way. You're doing 371 all the way to possibly, let's just take the top of this wick to 377. So you're trading $6 on Tesla. To some of you guys, the way that the stock market has been running, that's nothing. That's not a big move. Back in the day, this was a huge move. $6 was a huge move. $1, huge move on any stock, pretty much. Now, we're in different times. I know I'm just kind of showing you guys the basics, but this is the perfect example of a trap. This is a bull trap, pretty much, right here. whoever got over here, whoever got in here, the premiums on that day, whoever got here thinking that the stock is going to continue going up because we're above the 50 EMA now as well. We're above 2 EMAs, the 9 and the 50. Whoever got in here, the premium got burnt around here. As soon as it hit this line, which is the 200 EMA, and it crossed back down on top of under the top of this wick, your premium started to burn right there. So, and this is a hammer down as well. So this is another setup here that you're going to get a bearish move. Now you see here how I rejected. This is the hammer right here. The next candle started here, went under the 50 EMA, went under the 90 EMA. It closed under the 90 EMA. It tried going up to the 50 EMA again, got rejected. And after that, it just stayed down. It came a couple times to try to bounce off of it. And then just down from there on pretty much the whole time. Barely ever made it past the 90 EMA afterwards. 360, right? So if we look at SPY, it's even worse. But this right here would have been a bull trap. Let me see here.
Makes sense. Makes sense.
Does that make
Yeah.
sense?
I need to get those indicators on my Webull account.
Yeah,
Yeah.
anybody can put them on. I don't know. Well, Webull, yeah, you can do it on Webull. I'm not sure about TradingView, but Webull, you can definitely do it. I think TradingView, they have like sets. So I honestly don't know. I tried last time to get in there with you guys, but I just haven't used TradingView in a while. It is a good platform. Okay, so look, this one here is a perfect example of bullish momentum.
Before you continue, I'm sorry. Can you explain what a bull trap? I understand bull is going up, but what's a bull trap?
Yeah, so a bull trap is mainly when I don't know how to explain it better
Want me to
than how
explain
I'm
it?
about to explain it. Yeah, you can explain it if you want.
So
Go
in
ahead.
a sense, it looks like it's going to
Oh, damn.
continue to
All
go
right,
higher.
I'll explain it.
So
I'll
maybe
explain it,
your
Nico.
confirmations
Oh,
all
there you go.
hit.
There you go. You got a robotic going on, boy.
No, disappeared.
Nico, I'm gonna explain it, bro, because I know like the mic keeps on coming in like really robotic. So
How about now? I'm back home.
better. Yeah, go ahead. Try it now.
All right. So let's say all of your things line up, right? All your checklist lines up. You're like, oh, this is hitting. This is perfect. This is going, right? The RSI. But there's plenty of times where we've jumped into a trade, just like on Friday. We jumped into a trade. It's going up in our favor. And then all of a sudden it dumps, plummets, right? So it looks like it's set up for a continuation. It looks like it's going to go in our direction. And then all of a sudden, direction changes quickly. So a false breakout. It looks like it's going to break out, and we don't really get that full breakout. It stops and it gets rejected. Make sense?
EC.
But there
When I
isn't.
first-
Oh.
Yes, thank you.
No problem.
Repeat that again.
She's done.
I think
Okay.
so.
Okay, EC, when I first told you, you mentioned something about the 9 EMA crossing. I noticed on this, the 9 EMA is crossing the 50. Is that what you meant? Like when the 9 EMA crosses up the 50, it's most likely going into an uptrend. And if it crosses down, it's going into a downtrend. That was originally my question before you.
Yeah. So
Okay.
I'm showing you examples here. If you look at my screen, right? So if you look at the 90 EMA over here on this side, this is the 90 EMA, and then you have this reversal. This is a reversal down here, right? So this is Tesla as well. So 378 all the way through 384, and then you have a little bit of consolidation here. It almost barely just goes under the 90 EMA again. It picks it back up. It closes above the 90 EMA, which is this candle. This candle right here closed above the 90 EMA. And then the next candle goes above the 90 EMA again. So from this move over here, you got, if you got it here, which is the break, I would have probably grabbed it around here somewhere. But I would probably, me being me, I would have probably liked to see this consolidation make the actual move above the 200 EMA, which is the yellow line that we've been talking about. There's the 200 EMA. So as soon as I got rejection, look at how many rejections we got here on the 15-minute. 1, 2, 3, 4, 5, 6, 7, 8. 8 rejections. And then finally on the ninth try, we get the move, right? So we get a move. We move a little bit higher. This would be a good scalp trade. So this is not financial advice. I'm just telling you how I would run this, okay? How I would do it. Not financial advice. I'm gonna throw some crazy numbers at you guys right now, so please do not do this. There's a lot of new traders here, but I'm just kind of giving you an example on how I would do it. Right here, as soon as we broke, I don't know how this candle ended up going. I don't know if it went up or down. All I know is that it ended here, right? But as soon as we broke the first time above the 200 EMA, which is this candle, as soon as we broke above the 200 EMA, if we go down and I see that we're bouncing back up and we're above the 200 EMA, then that means that there's some strength there. Okay. So a scalp trader would take this trade all the way above to the next trade, wherever the next trade is. So you would probably enter somewhere around here if there's some kind of strength. My chart is a little bit, I guess you want to call it special because it does give me like some kind of breakout points over here. If you see these lines, these are supports and resistance, and I have them at the bottom as well. But I would have probably taken this trade somewhere around here, and I would have probably started scaling out over here on the top of this wick. So the top of this wick, I would have started scaling out on this candle here. Not on this one. I don't care about this one. This one, I know this would have been a perfect trade, I guess, but I wouldn't have waited for the next one. I would have started scaling out on this one as soon as we get to the top. Look, we got to the top here, and then we closed over here, right? So my point to get out is at the top of this wick. I would have been playing with a lot more money, not just 1,000 or 5,000, maybe 10 to 15K, just to get at least 20 to 25% of that. Now, tight stop loss, right? If I'm risking 10K or I'm risking 12K or whatever it is, I'm gonna have a tight stop loss. 10%, 5%, maybe even so. It depends. If the trade doesn't work out, fuck it. It didn't work out. It is what it is. Sorry for cursing. But those are the shots that you take. Same thing with puts. It might sound crazy to you guys, okay? I know, whatever. But that's how scalping goes. You take a little trade, you do it for like 5 minutes, 10 minutes, 15 minutes, depending on how it is. You put a stop loss, and then you just go in, get out. Quick punch, right? You punch, get out, you get back into the fight later on with a little bit of profits that you make, and then there you go. There's a difference between that, and there's a difference between swing trading. There's a difference between momentum trading. There's a lot of different types of trading strategies. On this in particularly, I would just do scalping as soon as we break over the 200 EMA on the 15-minute. If I switch it over to the 30-minute, it'll look a little different. You'll probably get a little bit more confirmation. I think it's this candle here. Should be around here somewhere, I think. So this is the 200 EMA on the 30-minute. We're completely bullish. This is the 30-minute chart. Okay, but this is on the week. We're pretty bullish. So if we're looking at this chart, you're going into the 15. You're gonna skip all this chop. This right here, you're not gonna get a lot of momentum. You're probably gonna get 20 to 25% depending, and you would have to get like a really, really good freaking entry. More than likely, you would have probably had to grab around here somewhere, and over here you would have gotten burned again. Your premiums would have been worth a little bit less than when you first got them here. Over here, same thing. Your premiums are probably a lot less than when you had them over here. And then over here, you'll start seeing some profits, or maybe start going even around here. And then here, you start seeing some profits up here. So yeah, it just really depends on how you want to do it. Going back to what we were talking about, which is the entries and exits, I would wait for confirmation, which is what we just went over, right? Don't just go into it unless it's like a high confidence play. So if it's a high confidence trade, you've done your homework, you've done your DD, you know that this is the spot that you want it to be at, whether it's at the bottom, whether it's at the middle, whether it's at an EMA, whether it's at a resistance, whether it is whatever, whether the RSI is burning or whether it needs to get cooled down. You've done your DD and that's what you're doing. You're following your strategy. and you're gonna lose a certain amount, or you're gonna make a certain amount as well. You gotta have targets for each one. Strategy. That's the strategy. Strategy is you go in it with a plan, you execute the plan, whether it's a winning trade or a bad trade. You just have to jot it down afterwards. If it was a bad trade, what worked? If it was a good trade, what worked? If it was a bad trade, what didn't work? If it was a good trade, what didn't work as well, or what you think you could have done better.
Question,
That's
EC. Can you
yeah,
hear me?
yeah.
Do you have a journal, sir? You have a trading journal?
Trading journal, yes, I do.
How important is that trading journal?
Very, very important. You have to write in it every day, just like if you're doing homework when you were a little kid. I'm 36 years old. I'm still fucking writing in my journal.
Facts.
Whether my whether my what do you call it? Whether my platform keeps track of my gains or not, to me that doesn't matter. Yes, that looks good. Whatever. How profitable are you on a freaking Tuesday versus how profitable you are on a Wednesday or a Thursday, or do Fridays work for you or don't work for you? What's your mindset when you come in? What kind of environment you're trading in? Are you trading at work? Are you trading somewhere where you can actually concentrate? Do you have the right setup? What did you do different that day? How did you get up that day? How was your morning routine? Everything has to be the same. You got to feel comfortable, because as much as you know, you're going to get burnt out if you don't do one thing. Just one simple little thing could really just ruin your mood. Then your mood is going to get into anything else that you do that day, not just trading. Uh, if you feel like someone is being toxic around you, doesn't matter, guys. I'm being real right now. It could be your spouse, it could be your girlfriend, your boyfriend, it could be your friend, it could be your mom, it could be anybody. It doesn't mean that they're being rude to you or they don't like you or whatever. If you just know that sometimes, or you might get into some kind of weird vibe with that person, just try to avoid it so you're done making your trade that day, because that's very important, super important. Make sure you're well hydrated. Make sure, just feel the vibe. Try to see, you know, get to
Even
that
when it
that
comes
point.
to music, try to play something
Yep.
relaxing versus something to get you hyped, where emotions start to kick in. Oh, I'm gonna jump into this. Then you start spending more money than you need to. It's just like playing music while you're driving. You start driving a
I'm
little
a
faster when you listen to hype music.
I'm glad you brought that up, bro, because in 2020, I think 2020 actually, when the stock market was going crazy, and um I used to trade a lot of like penny stocks, not like low caps, but actual like penny stock, like the penny stocks, like the OTC. And
Okay.
yeah, and these were companies that nobody knew about. They were like like the coins, like the meme coins back in the day. That's what it was, pretty much, if you want to put it that way. Back then, we didn't have meme coins. We just had the OTC. There were stocks that were worth 0.0001,
Pink
and then
sheets.
yeah, pink sheets, or sometimes they were just like they were delinquent. They were delinquent stocks sometimes too, and we would just push them because we knew that there was some kind of news around the corner, etc. But I remember there was a song. I'll try to find it. I I think the artist name is Chow or something like that. It's a Spanish from, or I don't even know if he's Spanish. I think he looks Spanish. I don't know. I'm being judgmental, I guess. But it's a good DJ. And the only song, I swear to you, I used to always play one song from him. It was called Vibrations, I think. And I used to play it every single morning, at least for the first hour of my trading day, every single day. And I kid you not. I kid you not. Yes, I had some reds. I had some whatever, whatever. I had some red days, but I definitely had a lot more green days. And I feel like that's why my name was EC Green Days when I first came on Twitter. Um, just man, we were just killing it. It's just all about the vibe, really. And I think that a couple times I tried jumping on calls with people and I couldn't play my music, so I had to like put one AirPod on my right side and then put it under my headset, and I was listening to music while I was talking to people, just so that we could actually just get it going. But yeah, man,
That's crazy.
that
So the same thing with me. Like through middle school and high school, I would listen to Friday Night Lights from J. Cole. So
Yeah,
every once in a
that one
while,
too.
while I'm every once in a while, I'll listen to Cole before we start to get into the market, so I can like start looking at whatever I'm about to jump into, put the watch list together, and then every once in a while, if you're on Zoom while we're trading, you see me and hear me play the J. Cole Friday Night Lights, different songs, like specific songs, so that I'm still calm, relaxed. I'm not hyped, so that when it comes time to me actually choosing my trade, it's based off of what I see, not off of any emotions or anything that kind of push me over the edge or anything like that. Good point.
Yeah.
Good point.
Yeah, no, but going back to like what we were talking about, just yeah, entries, wait for confirmation is really, really important. Have your strategy, everything else I said before. For exits, same thing. Just set the targets. Um, set the target. If you think that if you already put a resistance where, example, Nvidia hits $135, which is the next resistant, you sell, or you use a trailing stop. You can do a trailing stop. I'll explain that a little later. It's a little bit more complicated, and I don't want to keep like throwing new things at you guys. But trailing stop, you can start selling in increments, I believe. So you can start moving up also your sell limits. So if it hits 130, you can put it at 129, and then if it goes down to 129, it's sold for you. You're already in profits if you got it at 125. Just an example. So it's very important to set targets. Stop loss, same thing. We went over it before. Always protect yourself from bigger losses. I always say the same thing. I think Nico does too. Minimize your losses, maximize your profits, right? So you want to leave a runner, leave one runner. You want to leave two runners because you had five before and then you sold three, you're in profits, and you want to leave two just to see if you can make some more money. Make sure that you put a stop loss on those two that you're leaving. Um, if you guys want to get more technical, we can do that at some other time as far as like when would be um what what would be so the cross should be made with the candles, not necessarily the lines. Yeah, it really depends on you. Like I said, I work off of the legacy EMAs. We went over this last time, and the SMA is a little different, but they're ideally the same thing. I go based on the candles and the break. You got to know when the candle is closing and when
So,
the candle is starting,
so the
right?
question would be: is it the body that you're referring to, or would it be the wick?
No, so it would be the body, the body.
Okay.
So this wick right here, let's say, let me see if I can find a better one. I'm gonna go to SPY probably. Let's go to a longer time frame. So, Bubby.
What'd you say EMA stood for again?
Exponential moving average. I do the legacy one. Okay, so you see this candle is hard to trade here. This one is hard to trade. This is the 4 hours, so it's a longer time frame. But if you look at this candle, we had a confirmation. We had a confirmation. This is everything is above. When you go to a longer time frame, everything is above the 200 EMA. When you go into the lower time frame, everything is going to be more than likely everything should be below the 200 EMA, unless you're doing the same day chart. I'll explain the same day chart and the intraday chart in a minute. Um, let me see if I can find a candle for you guys or like a setup for you guys here. Okay, so I guess. Um, okay, so look, this candle here, right? The gray one. It's not green yet. Don't worry about the colors. They're all green or red, whatever. I just have it set up a little different. But this candle here, can you guys see this candle? The one that I'm marking?
Yeah, it's hollow.
Yeah,
Yeah,
so
hollow.
that one's hollow and it's above the 9 EMA and the 50 EMA, right? So it ended above the 50, above the 50 EMA and above the 9 EMA. Now the next candle, what happened? It started here. It went all the way up here. This is a trend line that we drew on the last Zoom. And look at how perfect it's kind of over here was handling it pretty good. Um, and went all the way up to the trend line that we had drawn, came back down, right? And it closed here. So yeah. So this is another day. This is a different day because you have two candles each day. So this candle here started right here, went down, and it went down the 90 EMA, the 50 EMA, and the 90 EMA, and it closed under the 50 EMA, under the 90 EMA. It closed on a trend line though, right? So it closed on a trend line. So since it closed on a trend line, I think the next day it probably had some kind of update or something like that, and the stock actually gapped up a little bit. So this is what we have here. Here you have a down momentum again. It closed over here. This is the 90 MA again. This is the 90 MA. So the 90 MA actually stayed above the 50 on this one. And then you see here another move. This here probably had some kind of news again if something happened. Tesla's been kind of hot with the news. And then here we have the breakdown. It's breaking down again. So if you look, the bodies is whatever is full or hollow, okay? Because I have it different, but full or hollow, but this is the body. So you have a hammer here, a hammer here. This is the candlestick. I don't count candlesticks. I don't really count candlesticks. That means that the volume for example, here, this candle went all the way down here and they bought it back up over here above the 90 MA. Then the next candle started and went down here. They bought it back up above the 90 MA. This candle over here started over here. It went up and went down. It went down again. Actually, it probably went down first and then it went up and then it settled over here above the 90 MA. This candle here finally caved in under the 90 MA. And then here started struggling under the 90 MA. Boom, 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 till it finally went down, went under the 90 MA and under the 50 EMA. And then we had the candle here. So this candle here was 406 all the way down to 494. So that's an $8 move, pretty much. I don't know if that does that make sense to you guys?
Yeah, dude, following.
Yeah, so the wick means if it's a long wick, it means that they're buying there was some kind of buy-in on that end into that direction. So if this one is upside down, it went all the way it went all the way up and then they sold it all the way down. Since this one is the wick is down here, so I went all the way down and they bought it all the way up, all the way back up over here. So there were some buyers here, right? This is why we got these move over here. We got this move.
Would you be able to scalp right there in that little move you just showing?
It's hard to scalp here because if you think about it, this move here, this is a 30, this is a 4-hour candle. So you might be able to scalp over here on the, let's say like the 10-minute, I guess. It will probably be, I'm not sure which one. I think it was this one. I think this is the move that we had. Yeah, 369 to no, it's it was in the oh, cuz this is the 5-day. So I would have to go to the 30-minute. Same thing, 5-day. So you got to look at it this way. So look, this is a 30-minute. Look at how hard it would have been to actually scalp off of this one cuz here you would have had you had a shut down, right? So all the way up above the 90 EMA, above all the EMAs, and then the next candle just completely burns you.
Ooh, okay.
So it just really it depends. I think this is probably the best example that I can give you as far as like a breakout, right?
Mm-hmm.
But here you have, let's say if you buy over here above the 90 MA, you have the next candle that burns you. Your premiums, if you're still holding from this candle, which you were probably in profits, and you held on this candle, your premium went under whatever price you bought. So let's say if you bought at $1, this is just an example. It's probably not what it is. But if you bought at $1 here, if you bought 10 cons at $1, that means that you bought $1,000 worth of cons of calls for Tesla, I guess. On this next candle, those cons are probably gonna be worth like 80 cents, maybe, or 85 cents, because you're already getting a burn over here. This right here, you go up, you're probably in a little bit of profits again, then you go down, then you go up. You're still above the 90 MA, so you could possibly hold it, but what if this candle here goes under the 200 EMA? Why not just see, hey, it's steady holding above the 90 MA, it's steady holding above the 90 MA, and this is a pretty big candle. So I think this is the candle that I said I will scalp. So once we get a full break, that's when I would scalp. If Tesla had news at that point, maybe this hasn't happened yet or it hadn't happened yet, and it had news, I would
Mm-hmm.
probably hold this. I would take some profits and hold this for a bigger
Okay.
move. I see Nico doing that all the time, so he's pretty good at those trades.
Alright.
So
Bang bang.
so if you have something, Tesla, Elon Musk is saying, I don't know, just an example. Hey, I love burning shorts. Shorts don't know what's coming to them, whatever. This right here, it would not be like this. This would be somewhere in like freaking, I don't know, in Mars
And real
with
quick
him.
before you move on that filled candle right there that you were saying, not that before we were looking at that one right there. You said we would
Uh-huh.
lose, your premium would be burned up because it's closing under the blue EMA, right? Is why we would lose money on the premium.
No, so the reason why it would burn, I'm gonna talk about the burn in a minute. I think I have it in my notes. If not, I'll find it and then we can hold some other type of Zoom about like how it burns.
Mm-hmm.
But so let's just say you bought here, right? So if you bought here and you bought it $1 and you it goes all the way up here. This is 384 and it went up to 386. So that's a $2 move. It depends on, I don't want to talk about the Greeks right now because I'm gonna throw like a curveball at you guys, but it's a little different. So you have to go by what the delta is. Let me see here. And you guys need to study this because this is very important, learning about the Greeks, etc.
Mm-hmm.
So IV crush doesn't matter when, but you always get an IV crush always. It's called the implied volatility. That's the IV. So in this time frame, it's gonna drop. It's not gonna drop that hard, but it usually just drops. So the premiums of whatever you're holding starts to be less in price. The premium, whatever position you have, is gonna start going down in price. If you're buying at, I don't know, example, if you're buying at $100 and you're buying $105 calls for Friday, and then you go up to 103, but then the next candle brings you down to 101, then you might even be red because you start at $100 and you go up, and then you're on Monday or Tuesday, it doesn't matter. You already made some kind of a move, and then you're going back under whatever price it already reached. It's a little complicated. I don't know. I will probably explain it a little bit better with the delta. I'm gonna put something in the chat for you a little later so you
Okay.
can better understand it because it moves up a certain amount of whatever it tells you. If you go into any broker and you look at your options, some people decide to put the volume and the OI on there so that you can actually see how much open interest it has, how much volume it has had. The volume includes also the selling of the cons, not just the buying, but how much the selling and the buying of that cons it has for that day.
Mm-hmm.
Uh, Open interest is, obviously how interested people are, how it is, whatever. But you also have an option there to put the Greeks, which you have the delta, you have the theta, you have a couple of things there that mean different things. I believe the delta, um, let me see here. So I believe, I can't find it right now, but I think that the delta, it's like the sensitivity of the options price, right? So the options price sensitivity, I think that's what it is. So let's say if Tesla call with a point 0.7 delta, it moves 70 cents for every dollar the stock moves. That's something
Yeah.
really interesting. I'm gonna go ahead and like explain it to you guys a little better in writing in the Discord. The theta, which is the time decay, which goes on
Mm-hmm.
from the moment that you purchase it from Monday, you actually have let's say Tesla is at $500 calls for Tesla. It loses probably like 10 cents per day, depending on how the stock moves. So if you get a $500 call at a dollar, you're going to be experiencing a theta burn of 10 cents per day. So it doesn't really hold. You shouldn't be holding that for very long, depending on how it is. That's with any stock. This is just an example. And it goes even more if you're having some kind of news that it could impact it negatively. Because if you're looking at a 10 cents per day loss on a call, and you bought it at a dollar, you know that's 90 on top of that with however the stock is moving if it's going down. You know. So I'll find something there that I've worked on in the past, and I'll send it in the group.
Don't forget, anytime EC says a dollar, he means $100 for the contract. So if it says 1.00, that's the $1 he's referring to.
All right, let's see. Was everybody good with the entries and exits?
Speak up or forever hold your peace.
The entries you use in the straddle or strangle strategies, right?
You can do that too, or you can do it with regular options, whatever you're taking. I like taking if I'm trading lately, I've been trading a lot of Mara, MARA. A lot. I trade SPY every day. Um, PLTR. I find Nico knows this. I find a lot of like plays. So we're kind of like a little bit. I can play calls and I play calls, but sometimes when I get on, let's say if it's at 9:30, I don't like to. I haven't been swinging a lot of things lately. I've started to swing more now, because the market is showing that it is going to go in a certain direction. So I'm leaning more towards that direction. Before it was just like calls, 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 and then when the day opened, you don't know what it's going to do. You don't know if it's going to drop 2 points or 3 points and then go back up, which it usually did. So to me, I don't like having that risk on, unless it's something that I'm like comfortable with. So I like to find an opportunity where I know that that there might be some kind of rejection. I take that trade, which usually has been a put. I take the trade, not on any other stock, just the ETF, SPY ETF or SPX or NDX, whatever, just some kind of ETF or futures, anything like that. I take my trade at the spot, which is usually a resistance or an EMA or a previous resistant or a trend line, whatever it is. I find it, I take the trade, I put a stop loss, execute it, win or lose. That's what we do. But I like my chances because I'm the one that has the strategy already. And I mean, for every call that Nico has had, I've had a put, and both of them have paid out. His call has paid out, my put has paid out. Sometimes one of ours take a little bit longer than the other, but most of the time it pays out. Sometimes I'll just pop into the chat with him and I'll be like, "Hey, I caught that," and then I show the profits or whatever, and then he says, "Hey, I caught the call too," and then he shows me the profits for the calls. So it's just finding the opportunity everywhere. It's not just call, 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 put. It's not about that. You can do it like that, and that's fine because that's your strategy. But you got to be comfortable with both, and you got to try to imagine if the market was just a chop fest for the rest of the year. What are we gonna do if you're a bull or if you're a bear? If you're only waiting for big moves to the downside or to the upside, what are you gonna do if we're gonna be in a chop of $2 every day, on a $2 chop every day? You're gonna have to learn how to trade both ways, or you can just sit there and wait all day to see if you get your call or if you get your put. So yeah, I think it's good to know both sides. I think it's good to follow your strategy. But always follow your strategy no matter what. If it's just a call or if it's a put, whatever, just follow your strategy. But yeah, to answer your question, bro, not just for the straddle or the strangle, but it's for pretty much anything. You can use this strategy for any type of stock, even if you're trading shares or whatnot.
All right,
I
so
think I'm the biggest bull EC Money knows.
Yeah, If you met me like a couple years back, we will probably compete with that. But you know, I think you are. You take literally no puts. I think I've seen you take like one put since I've known you. So
All the years.
all right. So somebody brought up when to exercise contracts. So I forgot who it was, but I have it on my notes. Do you guys want me to go over that?
Yes.
They're gonna
Okay.
say yes to everything, EC. They're gonna
All
say yes
right.
to everything, bro.
Wait,
We're gonna be here till 1 o'clock,
before
yeah.
before we move on to that, do you have your EMA level set at specific numbers? And I'm sorry if you went over that and I missed
No,
it. I'm
no,
just
I
trying to
didn't.
set me up now.
Yeah, I didn't go over it. I leave them how it is. I never touch that. So you have them here. So you have the 50. You can set this up for everything. I just put 0 close. This is what I put. I don't touch anything else. Just regular. Some people do
Yeah,
some type
and I
of
think that's
displacing.
why, yeah, I'm confused because I've seen people like tell like on YouTube like set it
Yeah.
at specific numbers and
Yeah, everybody has their own thing. You can try to find yours too, you know. You can see if this works for
Switch it up a
you,
little
if
bit.
yeah. But I leave it like that. I'm very straightforward with the trading. I don't try to if you look at my chart, I mean, I think this right here, which is the the train lines break, etc. And then also at 10 o'clock, it creates this for me, like this at 10 o'clock it creates this level for me. It sucks that I can't do the today 5 minute or the today 10 minute because it's actually pretty cool. But every day at 10 o'clock, it creates the top, which is this is the top right here for me, and it creates the bottom, which we can't see right now because it went down pretty hefty over here. But sometimes I'm in a trade and let's see if the 15 does it. All right, let me see studies. Oh no no no, we don't want to do that. Studies, edit studies. Equities. All right, we're gonna show the extended market. All right. Gray portion is the aftermarket and the pre-market. Okay.
Mm.
So let's go here to. So automatically at 10 o'clock, I'm gonna have that green line, unless it creates a new high, right? I'm gonna have a green line over here, which is the high of the day of that very day, right? Which I think this was Friday for Tesla, and then it's gonna create, I believe it's this line over here, which is the pretty much the bottom without the wick. So it's this little white and this little white line. I'm gonna zoom in a little bit more. So it creates it for me right away. So this line right here, this was the bottom till it created a new bottom. So again, you have it here. You have, if we go to the left, we have there's a 200 EMA, and when it's above the 50, it's above the 9, it's above the 200. Then whatever news we got, it created the high, whatever, it came back down. If you get a sell off this bad here, this is a big wick. This we were talking about it before. Remember, we said if it's upside down, because the other example was this was upside down, right? And then the stock continued to go up. So if we have an upside down candle here, this got sold off. This means that it had really good momentum till they got sold back down under the previous wick. It closed under and then it gave up. And I think that's when the news came out for Michigan. So it sold off. So here we're under the 200 EMA, under the 9 EMA, and went under the 50 EMA and went back up over the 50 EMA. It closed here again, and went down and went back up over the 50 EMA. And then it closed, went above the 90 EMA, trying to reach for the 200 EMA, and went back down under the 90 EMA. And then here it traded in between the 90 EMA and the 50 EMA till you get that break right here. The break means that it went under the 9 and the 50. And then we got the push down. This right here was another fake out. This what I don't like. This was the bottom from the open. So me personally, I would have probably here on this candle. If I make it to this candle after this break, if I make it all the way down here, which was the low of day, if I make it before the other low of day got created, if I make it to this candle right here, and this one closes here, this candle closed here, right? This candle started here and went down a little bit and then went back up. If it goes above this line, this red line here, that's my stop here to take profits. I'm not gonna see this because if I see this candle, I'm probably gonna be red on my puts that I took over here. That makes sense. That's what we were talking about before about the burn. If I took this puts here from here to here or here, and I hold on to this candle that just showed up over here, this is the 15-minute. If I hold on to this candle goes up all the way up here or even over here. Actually, probably even over here. This candle goes here. We're probably gonna be even on our money.
Oh, because you put a put and that's going up, so that means people are buying in.
Correct. People are
Copy,
buying in
copy,
for the stock
copy.
to go up, and they got psyched out over here.
Mm-hmm.
Went back down. This candle opened here. It probably went up here again. It rejected off the 90 MA, and it went back down, and then it went back up again, and it closed over here. Same thing with this candle.
Mm.
This right here, the whole thing right here is a chop. After I made the first move, this is a chop. Where I would have taken my puts again would have been on this rejection here.
Mm.
And this is the confirmation again for the puts under the 90 MA. Uh, remember, Niiko, remember we were like chatting? We can do SPY. It's the same, probably the same chart.
Same, literally the same exact damn move, damn
Yeah.
near.
So I think I said
You just took it. So that's what I was telling you.
so this was the 30. Okay, this was the 30-minute. And then this was the setup. This was the chop. And I believe that I said if SPY breaks under, I think it was around here because you have the resistance here. There's been resistance now twice. This candle here, if it broke under like towards the middle, I said that SPY was probably gonna make another move down. It made the move down under the 200 EMA, but it never fully broke till after the next two candles, and then it just kind of hovered here. So this tells me that on Monday we're probably gonna have a gap down, unless something comes in with Trump saying something about like no tariffs or something like that.
Dumpity
He's
dump dump.
he still hasn't talked to China, but you never know. Maybe the market goes $10 up. You never know. You know. Um, but yeah, that's was that a little bit more like easier to understand?
Yeah. Yeah.
Okay. So we went over the indicators.
Oh, for the indicators on Webull, I got EMA 5, 10, 20, 30, 60, and 120. I don't have 200.
Okay. If you select one of them, is there a way for you to edit it or no?
Nah, it just gives
You
me.
said Weeble, right?
Yeah.
I'll figure it out for you. There's got to be a way for you to put it, so I'll figure it out.
All right. I'm gonna just leave it at
Um,
EMA 5 then.
yeah, that's fine.
All right.
It is,
Any
you gotta
any
click the hexagon.
The
So
heck?
when you draw down the EMA, it's like a hexagon next to it.
Mm-hmm.
And when you click that, you're able to change it.
Change like. Oh, okay. 200. And which one did you say to use? ECMoney?
the 90 EMA, the 50 EMA, and the 200 EMA.
90, 50. 90, 50, 200, and what was the last one?
9, the 9 EMA, and the 50 EMA, and the 200 EMA. That's it.
Okay, cool.
Yeah. And I can send this to you. This is how to set it up. Put it here on
Don't
the screen.
forget, guys, this isn't the exact perfect formula on how to make money, right? This is
Exactly.
more of what works for EC, what works for me, what works for whoever it is that's going over the trades. Everyone's may not have the same exact like setup, schedule, be able to watch the market. Me and EC literally just be chatting back and forth and looking at the market all day. You may be on the go, moving around, and you may not catch the same opportunity, or you may not be watching the market all day so that if price changes, you can react quickly. So depending on how you are and how you work and how you know you are, everyone's setup will be a little bit different, or at least something to accommodate how their lifestyle is or how they view things. So don't forget, this isn't going to be anytime we have YouTube or anytime we have Zooms or any lessons, right? It's not necessarily, all right, here's the perfect formula. Start adding this to the list. It's more of, does this work for you? Does this resonate much easier when you're trading? Does it kind of make it a lot easier for the process of you trading?
Yeah.
Okay, my bad.
No, that's true. That's true. That's true. This is what works for me, guys. So, you know, you got to find your own strategy. If you put it on and you like it, keep it, and then you can add more stuff to it, or you can take something off of it. If you feel like the 200 EMA doesn't work, then it's fine. You know, however, whatever you guys want. I'm just telling you what has been helping me, uh, you know, so far make money and keep it simple, pretty much. Um, Somebody asked about the RSI. This is really simple. I'm just gonna keep it very simple. The RSI, which is I believe it's the relative
Relative
strength index, right? Yeah. So sometimes I just say RSI, fucking MACD, whatever. There's a bunch of stuff. So RSI, keep it simple. All right, keep it simple. Overbought means above 70 or close to 70, and oversold is below 30. Okay. So anything around 35 or I don't know, 35, 30, I would consider that getting to oversold territory. Sometimes even 40, depending on the stock, is oversold territory. But a lot of people don't like to actually say that it's oversold unless it's below the 30. And also overbought if it's not above the 70. So if we're going to the chart and we add a study, which is the RSI, we're gonna go and edit studies. We're gonna put RSI. We're just gonna put RSI right here. So we have the 70 and the 30. We'll put okay. And then we have the RSI down here, right? So the RSI right now on SPY on the 30 minute is 33. Now, usually people like to do either the 4 hour or the 1 hour or the 1 day. So the 4 hour, you have 42, meaning that it's almost getting there. Every time, if you look here at the bottom, I don't know if you guys can see it. If you look at the bottom, every time that it has gone to 30, mostly, it has gone down a little bit more, which is the 25, whatever, blah, blah, blah. But it has had a huge bounce almost every single time. So from 30 to 40, which is this one here, we're going to go with the chart. Let's go to the daily. Okay. So this is SPY. We're at a 51. Actually, let's do an actual stock. Let's do Nvidia. Okay. Nvidia right now is at 48 RSI on the daily. Now, if we look here, every time that it has gotten to the close to the 30, we have had a bounce, and then we've had a trend pretty much up. This is kind of close to trend up, and then it touches the 69. Look, 69 going down, trend down. This one was completely crazy. This was when it was just going crazy. I believe it was a little bit closer to when the years last year in May or April, something like that. I'm not sure. But if you look here, as soon as it goes above the 70, it starts struggling. Most of the stock do the same exact thing. So 30 oversold, 70 overbought. So around 70, you can start looking for some kind of puts. I've seen some RSIs go all the way up to like 90 or 85. So it doesn't mean that it's always going to happen. But keeping it simple, RSI, relative strength index, overbought means above 70, oversold means below 30 or around 30. Okay? So example, AMD at RSI 75 means overbought. You wait for it to drop before buying. Or you can get puts, long-term puts, not just like short-term puts, because you don't know how long it's going to stay around those areas or those prices. Um, for the trends, you have the uptrend, which is higher highs and lows. So, for example, Tesla, just an example, Tesla's been climbing since 400, I guess you want to call it like that. That means a higher high. Downtrend, lower highs and lows. Example, PLTR, I don't know, struggled below 30 for a long time till it finally popped up. So it broke the downtrend. That was a downtrend because it was struggling below the $30. It's just an example. I know PLTR is like 100 and something dollars right now. So price action, this all goes with the RSI. It ties in with all those pretty much like the RSI trends and price action. Price action, you watch for support and resistance. So example like we did before, SPY keeps on bouncing off of 400. Example, I know SPY is way higher right now. SPY keeps bouncing off of 400. It would be a great buy zone because it continuously keeps bouncing off of 400. If you look at this chart for NVIDIA, which is the daily, right? Remember what I said before, the 200 EMA is at the bottom of everything because it's a longer time frame. What has it done every time that it has reached the 200 EMA? Besides over here, and it actually did it. It has bounced off of it, right? Went under,
Yeah.
bounce. You have the 90 EMA curling. You have the 50 EMA right there. Then over here again, right under the 200 EMA, bounce. It captured the 90 EMA. The 90 EMA captured the 50 EMA, and then boom. Close to the 200 EMA, same thing. Bounce, capture both EMAs, and look at the run. Stayed above the 90 EMA, under the 90 EMA, under the 50 EMA, above the 90 EMA again, and then under. And then we had some events over here, and then here finally under the 200 EMA again. This is a buying opportunity. I know that there are some other traders out there that they keep saying Nvidia is going to go to 145, 150, 155 again. I believe it. Nvidia is the strongest chips, I believe, semiconductor out of all of them. I do think it's going to go higher. I want to see it grab the the 50 EMA, and maybe there is a trade. There's probably a trade from here to there. This is what, a $5 move, which is
$5, I
pretty
think.
good. Yeah. So if we conquer that, we stay above it. This is the 50. I'm sorry. This is the 50 MA. This is the 90 MA. If the 90 MA can conquer the 50 MA, we're gonna get a huge move. So first move would be over here, which is the cross on the trend. So you're looking at like 141. If we can break this right here. I hope that answered the question for the trends and the price action and the RSI, etc. There's a way to combine them both. I somewhat explained it here with this example. But you can pretty much, but if I was to trade with the RSI, I never trade with that anymore unless I want to look at it. You can just you can just use the RSI for timing. So if Tesla's on an uptrend, but the RSI hits like 75, then you just wait for a pullback. Same thing that I said before with AMD. You wait for a pullback to buy. If you're just trying to buy commons, which is regular shares. If you're looking for options, then 75 RSI would be a good idea to grab some puts. Um, Same thing if it's going on the downtrend. If it hits 30, it's a good idea to grab some calls. It's a little bit safer, and then you can also tie them together with the other EMAs or any other indicators that you have up there. Is that good?
Yes, sir.
All right.
Any
And the
questions, y'all?
all right. Um,
Love it. When everything goes smooth, you're like, damn. Hey. Y'all, just let me
yeah.
know that I'm doing it right. Like, does it make sense, guys? Is it a little clear? If you were confused on something, do you now understand?
Yeah, I
Yeah.
finally understand a few things.
So as you trade more, as you get used to the market, as you start to see the different things play out, you're gonna have a lot of those aha moments and those times where it's like, oh, okay, that's what they said, or I see now. We may talk and give you guys information, right? But it may not resonate until that moment actually comes and you're like, okay, this is what he meant when this crosses, or this is what they were saying when the EMA. So certain things you may not have a question now, but as time goes by, those questions start to come up. Don't be afraid to double check and ask, like, hey, I just want to confirm. Like, there's things that EC has shown me, and months on months later, I'm over here like, hey, remember when you were telling me this? Can you like re-explain it a little bit just so I can make sure I know what it is? Those, it'll be just like if you're at work and you're not sure about something. Same concept. You got to double check, make sure you know it for sure. Repetition. You do enough. You do something enough times, it becomes a norm. It becomes natural. It's as if you don't even got to think about what to do or how to react to it. That's how you got to treat the market. Don't just wait for us to pop in and post a video or say, hey, we're going to jump on Zoom. Take the initiative to watch the videos online. Take the initiative to say, hey, can we go ahead and jump on? I got a question, or I just want to get some more understanding of something. Because the more that you really make this a lifestyle and actually understand and develop something that works for you, it'll be easy. Like me and EC at the beginning when we were learning, we were not this confident when 9:30 hits and the market's open, right? It takes time for you to get confidence in what you're looking at, what you're trading in, to be able to post trades for someone else to follow. It takes time for you to get that confidence. Once you get to the point where you can trade on your own, you don't gotta look. For me, I still look for insight from others, but I still trade based off of what I see, whatever
Yep.
I'm used to, right? Someone could post $1 million play that could turn in $100 to $1 million, but what's crazy is I'll still look to see what do I see in this. Is it worth it for me and what my guidelines of trading mean?
Yep. Guys, I'm gonna be completely transparent about something, right? And
This week?
no,
Go
no,
ahead, go
not
ahead,
yet,
my
not
bad.
yet.
Go
No,
ahead,
we're
go
not
ahead.
gonna hit him with that yet.
All right.
So I'm gonna be transparent with something, and this is kind of just picking, just kind of right in with what Nico's saying, just so you guys can kind of see how important it is to follow your gut and do what you got to do for yourself, right? I've been in this game for a long, long time, maybe since I was 23. I'm 36 right now. Okay, I think 23, 22. I'm not sure. Um, I have I'll show you. I mean, I'll give you like a little glimpse here. I've actually narrowed down a little bit too for the amount of discords, and actually I think it's mainly because of the type of invites that I get. But let me exit out of this one first. Just
I'm
gonna
in
go to
60
Discord.
I'm in 60 Discord.
Whoa! I'm glad you finished that sentence.
60 Discords.
Hey, yo.
Hey, yo.
Big pause. So, and some of these are like really, they're very like they're really really good discords and they cost money along with some other ones and they've given them to me for free. And if you look at the updates, if you look at the updates here, right, all these right here, and there's more down here, But if you look at those updates, you have 1,000, 2,000, you have 227, and I have them on mute. You have
God
1K. There's a
damn.
couple of people in there, right? I I swear to you, I don't take anybody's trades. And me and Nico we've talked about this, like I've missed out on a bunch of opportunities, but I don't take anybody's trades. And these are people that have hundreds of thousands of followers on Twitter and Instagram, whatever, blah 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 blah. But I'm comfortable with what I'm comfortable, Like I think the Discord that we have right now, we're actually trying to teach or versus just giving out a call out. Nico takes the time to explain things. I take the time to explain things as well. Some other people and the staff, they take the time to explain what they're good at as well. A lot of questions are being answered. Some of these other, I'm not trying to bash, right, other discords, but some of these other discords, it's just like, take this call, take this put, take this straddle, take this strangle, take this options leg, and do this other leg on top of that, and do this and buy this, and it doesn't matter. Like it doesn't go anywhere. What is that teaching you? What happens if the Discord shuts down and now it's on you? I'm not talking about this one. I'm talking about the other Discords. If it shuts down, it's on you. You guys are screwed because you don't know what the hell you're doing. Nobody taught you anything. At least we're taking the time to teach. There's gonna be some stuff coming up um, that I'm gonna talk to Nico about, and we're gonna try to help you guys out a little bit even more. I wanted to kind of wrap it up with something that somebody asked. They said, uh, when is it a good time to exercise a contract or a position, I think. So I think this is the last thing I want to probably go over, unless Nico, you want to go over something else, and then maybe we'll host another Zoom sometime next week, and we'll go over some other stuff. But never exercise your contracts, please. It takes a lot of money. I have exercised Tesla maybe once or twice. And that's because I really wanted the shares because I had them at a really good price in 2022, I believe. No, in 2012,
2012.
2013, 2012, 2013, something like that. Tesla was at, I don't know if it was $150 or something like that, and that was the first time that it ever did the split. And man, I believe I took out money from my 401k. I took money from a bunch of places just to be able to purchase it because I didn't have the funds to actually purchase the shares myself. And it was a contract that I had. I think I had a hundred of the cons, because remember, if you purchase the cons, right, you're paying a smaller price for whatever it is. So let's say if you're buying the stock is at 100 and you're getting $150 calls. You're buying the stock basically at $100, but you're buying 100 shares per contract. So if you're buying 100, that's 100 times 100 of the shares that you're buying at that price, right? So if the price is higher later on, you're locked in at whatever you purchased it at. I don't know if that makes sense to everybody. I don't know if you guys knew how it worked. But me
Can I
personally,
exercise really quick?
huh?
Exercise. I'm gonna explain it real quick. It's basically buying. So our contracts we have, it's an obligation. It's not an you're not obligated to actually purchase the
You get
100 shares.
assigned to it.
Yes. So instead of actually fulfilling it, what we normally do is hold on to the contract for a little bit, get rid of it. Hold on to it for a little bit, get rid of it. Instead, and when you're thinking more long term and you want to actually own parts of the company, it allows you to buy it at a cheaper or lower price. So when EC would buy into his contracts and exercise his contracts, it would be him spending, let's say if price is at $400 each, instead of him spending $400 on 100 shares, maybe he's spending $390, maybe he's spending $380, maybe he's spending $3 less on each share. So automatically he's up on those contracts once he exercises. So now if he wanted to, he could sell or just hold on to those shares and think and continue to be a long-term trader.
So you're only exercising when you got bread and you got breach and you want to really, when you really believe into a company.
Yep. So real quick, the math would be every contract is 100, right? So one contract that you take of any stock, either calls or puts, is 100 shares of that stock. So if you take 5 contracts, that's going to be times 100. So that's 500 shares that you have. So if the stock is at, I don't know, $500, or let's just say $500, you do 500 times $500. That's the amount of money that you need for that, right? But if you got the cons at 450, let's say, right? The stock was 450, you do 100 times uh did I say 50 or 5? It was 5, right? I think it was 5 contracts.
It was 5.
Yeah, so that's 500 and then times 450. That's a $25,000 difference. So
That's
I'm
a big
actually grabbing
difference.
I'm grabbing the stock cheaper at a cheaper price and I can sell it later. So if you guys remember Tesla around that time and went all the way from $175 all the way to almost what, like
3,000
1,000,
more bank.
something like that.
Yeah.
And then it did the split afterwards. So think about it. They gave me more money too for the split. I got more shares. I mean, everything's good. But bottom line, don't ever exercise your contracts or your position. Take the cash. You do what it is basically you're turning your option into shares, into regular shares. If you have a $500 call on Tesla, the stock hits 550, you can buy the stock at 500 because you have the option to buy it at 500, and then you can sell it at 550. So why even do that? You rarely have to do that. You only want to do that if you want the shares for longer term. That's what I wanted in the past. So, for example, if the stock has dividends, that's when you would want to take the shares.
Oh yeah.
Most most of the time, just sell the contract for profit. That's what you would do. You know, um, why it probably matters. Whenever you're actually exercising, like I'm showing you right now, it costs us more money. You have to come up with $220,000. So I would just rather lock in the gains without like tying up the funds and not being able to move that money around, because those 225 or those 200,000 are just gonna stay there. It's gonna grow over time because Tesla's gonna keep growing. And another thing that I didn't know, and this is what I'm going back to saying, you gotta learn all the time. I didn't know that whatever shares that I'm taking from each split. So let's just an example. Let's say I have 10 shares, and then they do just an easy example. They do a 1-for-1 share, right? So they're gonna give me 10
Look
more
at that.
shares. Yeah. So they're gonna give me 10 more shares because it's 1-for-1, right? So I have 10 shares. They're gonna give me 10 more. So now I'm gonna have 20 shares. So on those split on that day, let's say if it was a year afterwards when the stock got split, it's a year afterwards, right? So remember, if you're gonna sell your shares within a year, before a year, you're gonna get taxed on.
Easy, 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 easy. You can't do it, can't do it.
Gonna do what?
Go over specifics on taxes.
No. It's not
Okay,
about, yeah.
okay,
I'm just saying it'll get you like on capital gains. That's fine. It's not a big deal.
okay. Just
But
making sure.
no, yeah. It'll get you on capital gains. So what I found out is that whenever the split took place, right? Those extra shares, I thought that I had to wait another year to actually sell them, so I don't get charged that. But since it was a split, it counts for the same time that I had originally purchased the prior 10.
Oh snap! That's
Yeah. So what did I start doing? I wanted to sell it. I wanted to start selling some shares, to kind of free up some money. Uh, and I didn't even end up doing that. I started selling calls. I started selling cover calls, cover puts. I just started doing some other stuff and moving the money around and collecting the premium for it, and without even losing my shares. And at some point, even gaining more shares because I would exercise some of those positions as well, with a little bit more money that was coming in from other trades and other things. But yeah, um, you know, it really depends. There's a lot of plenty strategies. I like sticking to the basics. You, you know, you just gotta do what's more comfortable for you. I don't know what happened to the chat. I can't see shit. All right, there you go. But yeah. If anybody has any questions, let me know.
The reason we trade options is
So
with
this is
that
for
comparison. If
EM.
you guys want to put questions in the chat while I'm going over, the reason why we trade option versus shares, right? He was comparing, you need almost 225K compared to, let's say if you bought into a contract, it could have been 500, 300, 400, and still come out with profiting 200, 300, $400 versus you spending thousands on thousands, $100,000 to make damn near the same thing.
Yeah. Yeah, it's cheaper. It's cheaper to have the options and always sell your options. I'm looking at some stuff here in the chat. um stocks I'm looking for into next week. I'm definitely looking at PLTR because I'm looking at PLTR, Affirm. I'm looking at I'm looking at Tesla. It's gonna be a big week for Tesla.
Yes, sir.
I'll tell you why I kind of short, like my short version of it. And obviously, you know, the ETF, SPY, SPX. But we're even for Tesla right now, we're kind of I'm gonna show you the chart. We're kind of like in a limbo, but I y- you know, keeping in mind everything that I said that I have on Tesla right now, okay? This is me as a trader. There's nothing bullish about this chart. Okay, I'm sorry, but there's nothing bullish about this chart. Now, best case scenario, something happens next week and all the reports come in good. Everything is freaking amazing. Elon has been talking about the thing that I don't like, and I like it at the same time, is that Elon is not more involved with the government, and he's doing a lot of really good things, and I appreciate that. But I don't think he's losing sight of his actual baby, which is Tesla and SpaceX and all these other things that he's doing, et cetera, whatever, trying to go to Mars and whatever. But he needs to concentrate also on what made him be there, what made him who he is today, which is all those robots, those neural things that he's working on, Tesla. I think there's gonna be a big news coming soon about charging stations. I'm gonna do some research on some charging station stocks, and I'm gonna drop them. If they hit, they hit. If they don't, they don't. Trump just put out some news about talking about the funding, like cutting off the funding till further notice of the charging something. I don't know, something to do with it. I gotta read the news again. But that's bearish for that type of sector, which is charging. I forgot which. There was one that I used to trade all the time. It's like at $1 now. It used to be 11 or $21, I believe. But there's gonna be some kind of news coming for that soon. Tesla again. If we're just going based on today's uh Zoom, we have the 90 EMA crossing down on the 50 EMA, and there's nothing more bearish than the 90 EMA or the 50 EMA getting close to the 200 EMA, which is lethal. Most of the time is lethal. Okay, so if we're going to the 4 hour, where are we at right now with the 4 hour? This is the 200 EMA. This is the 50 EMA. This is the 90 EMA. This is super bearish. You know, so we have a lot of good reports, a lot of really big reports coming up. So every time we're above the 200, the stock is shooting up. Every time we're below the 200, we're dying, pretty much. Dying. Dying. Big die right here. But here you go. See? Everything above the 200, the 9 way above the 50. We're going to get this move again at some point. We're going to get it. Might not be right now. There is a gap fill at 340 something, I believe. They might go for that. But right now the stock, look at the RSI, 28, right? 28 RSI. We just talked about it. Let's go to the daily in a minute. Hold on. If this thing wants to move. Daily.
Not too long
Daily.
ago, we were just going over. You can use the RSI on all time frames, the daily,
Yep.
the weekly, 15 minutes, so that you can get a bigger picture on what's going on.
Yep. Daily right here. We haven't reached. We have a little bit more down to go to the 30. But on the 4, we're already there. The daily, we're almost there. So again, just don't jump into conclusions. We have a big week coming up. There's going to be some opportunities. Uh, I think, I mean, PLTR is mooning. Me personally, I cannot. I mean, unless they're trying to make it I mean, this is a pretty bad candle right here on a daily too. This means that it has some downtrend, maybe to. I mean, if it reaches 96, then it's probably gonna cover this whole gap down, which will be insane. I don't think that would happen, but you never know. But this is, to me, this is a bearish setup. This candle here is a bearish setup. We can post the candlestick formations in a little bit so you guys can see what I'm talking about. I'll find it. This is PLTR. If I was look at the RSI on the 1 hour, it's at 79, almost 80. Last time it was here, we went down. It was over here. We went down 80 all the way to 70 and 68. So we went down 12 points last time it was there. So if we go down 12 points, that's 112. That's a good trade. If we go down to 112, well, actually, no. We're at what, at 110? Yeah. If we go down 12 points, then we're under 100. So that's 98, right around the 96, which is the 90 MA. So yeah, I mean, I would say it has to pull back next week, I would think, unless again the reports come out good or they come out with some other kind of news. But it's just a technical analysis. It doesn't mean that it's gonna happen. We're gonna have the other one that I was thinking is a firm. If you look at a firm, is they just had earnings. Same thing, right? RSI is 71. I think it still has a little bit more to go, more than likely, possibly. But same thing. They had really good earnings. I think they're going to thrive in this type of market right now. If we do get inflation keeps going up, people are going to have to start borrowing a lot more money. And a firm is a buy now, pay later type of structure, and they're working on some other stuff as well, I believe. And they do have some deals with bigger vendors. Like I think I think they were working on a deal with Amazon. I'm not sure. I don't know. I don't want to say something that's wrong. But yeah, Tesla, Nvidia, PLTR. I'm bearish on PLTR, although I believe they could just keep popping it. Affirm, there might be a trade here. This is a good candle actually, so I'm not quite bearish on this one yet. But the RSA says that we should wait till it pulls back. SPY, I'm not bearish or bullish. We are on a bearish setup right now, but reports coming up next week could change it. We'll have some trades for you guys. I'm sure Nico's gonna come up with something. I'll start throwing some stuff here and there next week. Um, and then Ashley said the EMX much more than average, so EMX is a bit more current on the movement, blah, blah, blah. Blah, blah. I normally use MA, moving averages.
That's
Yeah, I mean,
something someone had sent her.
oh, okay. Yeah. I mean, again, the same thing that Nico said. This probably works for them. You know, what I'm showing you guys works for me. You guys can take both and see which one works for you, and then you go based on that. It's the same. It's the same thing. It's the same thing. It's one is gonna work for you, the other one's not gonna work for you. Maybe both will work for you, and you just gotta choose one, whichever one you like most. Uh, I'm sticking to what I have. Maybe one day I'll find something better. I'll find a different setup. I have other types of studies here or styles, etc. Um, let's see. I mean, I have a lot of stuff. I have trend lines. This is a different type of charting. This one is the 5 minutes, so I'm not gonna put that up. But this one gives me the top, it gives me the bottom for the day. So here, top, bottom, same thing. This right here is called the whole moving average. So it takes away all the EMAs and it just combines it into one big one. So as long as this line right here is green and is going up, we're on an uptrend. If it starts curling with the orange and the red, that means that we're starting to curl down. If it curls down all the way, I'll show you on a bigger time frame. I'm just showing you that there's so many different types of indicators. Same thing, all the way green. This is the daily chart. Green, 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 green. No reason to sell. Green, 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 green. Here we start turning into orange. You got to start getting worried. And then over here we cross red. We start going down. And then we have earnings and we start curling back up. So if we're going on trend alone, just trend alone, right? Once it curled over here, it made a big move. We're getting a hook over here again. We got a big move. Does it stop here or does it continue up? Depends. Depends on what it does.
What's the
But
name of
yeah,
that indicator?
it's called the whole moving average. HULL moving average. You can look it up. I'm gonna give you a little bit of information on it right now so you can kind of see what it is. I'm just gonna look it up on Google and it'll tell you what it is. I don't use this anymore. I use it every now and then, but I think this one I used it for about 5 years straight.
Y'all
All
still
right.
with us? Y'all still with us?
So this one here,
Is
what is the
there?
whole moving average? The whole moving average is a technical analysis tool that measures the average price of an asset over a period of time. So the choice depends on your trading style. This is gonna say it to mostly everything. For short-term traders, which is me most of the time, right? Lower time frames, such as the 5 minute or the 15-minute charts, may be good for you. While long-term traders prefer daily or weekly charts. So if you saw when I first put this up, I put the style, I put it load, and then I put nice setup. I'm on the 5 minute because that's what I usually set up. That's usually what I was trading on the 5 minute. This one's not going to show the whole moving average because it's just on the day, that one day. We have this one's not going to show up because the market's not open. We have the 15-day. There's the 15-minute. You have the whole moving average. We can change it to the 5-day, 10 minutes. Whole moving average, same thing. You have a big move. Came back down to the whole moving average around here, and then it bounced back off and never made it back to it again. So, I mean, there's no reason to be out of the trade after you caught over here. More than likely, a lot of people are going to miss this move, this initial move. You got to be patient, wait for a pullback. This indicator will most of the time help you with that. If it stays above it and it keeps on bouncing off of it, here we had 3 bounces. So I would have probably grabbed over here, right where my cursors are. I would have grabbed here. This is tough because you have this candle coming all the way back down to almost your entry. So you're probably going to be either red or close to even again. And then this is pretty much decision time. A lot of people are going to get scared over here. If you get scared over here, you get psyched out of some good profits going back up all the way up to here. Once it starts turning, you start testing down at the moving average again, the whole moving average. And then finally you met the top here again and it got rejected twice and then it went back down. So you see this is the top of that day, which it created it on the 20th minute. So this is the first 10 minute, this is the second 10 minute. So if we started at 9:30, then you have 9:40 and 9:50. At 9:50, sometime at 9:50, this is the candle that it ended on. It touched the high of day. And then here it rejected twice off of the high of day. And then it went back down. And then pretty much stayed down to the end of the day and it got the bounce that it usually has at the end of the day. The end of the day bounce or burn is just them killing the premium at the end of the day, pretty much. To either side. If it's going down, they're gonna try to burn the calls. If it's going up, they're trying to burn the puts. Um, but yeah, no, that's there's a lot of other indicators, like like Nico and I were saying, just find whatever suits you and make it yours. Should be good.
clear, everyone?
Yes, sir.
Everyone else? I know Solo been responding.
Yeah.
Kenise, April, Ash, A, Courtney, GQ, Alec, 2 iPhones, Cat M, Kazi, Akita, Lenny, Millie, No Sleep, Summer, Vanessa.
Yeah.
Perfect. Don't be afraid to ask questions, please. That's why we are here.
Kenny, I guess Kenny's, right? I don't know if you're still confused, um, let me know. Just you can write in the chat or something like that, and you can go over the recording again. Sorry if I mispronounced the name, but you can just holler at me and then or Nico, and then we'll try to explain it, and we'll go from there.
Good. That'd be hard when they on chat.
Yeah, no, it's fine. I don't think I have anything else. I think I covered most of it. um, Option premium trading. I think somebody asked about that, but that we kind of covered that with the Greeks, and we're gonna roll out with some information about that. I know some of you guys said that you're good with those things. Some people are not, and it's good to know because that way you know how the contracts move and why they move a certain way that they move. So the way you trade the premiums real quick, when you're selling, you're pretty much selling a flat market. So an example, if Tesla is stuck at $500, you sell $510 calls for income. You collect a premium on that. So as long as it doesn't go to 510, you're collecting the premium on that one. Whenever you want to buy something before the big moves, so for example, like you buy like a Tesla $500 call before earnings, if you expect a jump, and you collect the premium on that. You can always profit or lose. So I don't do that very often. I only do that with Tesla because I own a lot of shares.
Easy question. So I
Yeah.
know you've been trading for a while, right? Have you ever had it where for most of the year you were killing it on a heater, and then more towards the end of the year it doesn't end up being? So let's say figuratively, we're just throwing a number out there. 200K for the year or 100K.
Oh, I got one for you. I got
I
one for
know
you.
you do. Go ahead.
So a firm, I think I've talked to you about this one. A firm, I think in 2022 or 2022, I think. Yeah, I think like towards the end of 2022. All right, whenever a firm reached $180, um, believe it or not, a firm was $80 at one point. Do we have to go farther? It hasn't been. It wasn't 2020. Let me see. Anyways, a firm was on a freaking heater. Me and a buddy of mine, we were going live every single day, and we were trading Tesla, we were trading SPY, we were trading everything you can think of. And then we found a firm. A firm at that point was trading, I don't know, like $30 or $25 or something like that, or $20. I don't know, I don't remember. But we found it. We started trading it the first day that we traded. We each put 5 bands into it. He put 5 bands, I put 5 bands. Obviously in different accounts, his account and my account. The first day we made 100, so that was 10 bands. I was like, damn, like we should have probably held this because the next day our firm had gapped up. So we were waiting for it to come back down. It never came back down. So I went to like $31 or something like that. On Wednesday, we got it to go back down. We made some money. We made some money. We put the 10 bands into it. again on some calls, and it was somewhat like in the money calls. A firm ended up going the next week, because we got it for the next week because it was already Wednesday. The next week we were shedding our pants over the weekend, by the way, because we were like, oh man, like we're just rolling like 10 bands over the weekend. What if it goes down? And these are kind of like far out of the money. I believe we had like $40 calls or $38 calls or something. I'm not sure, because what we were seeing in the chart and also the news that they kept rolling out with, they were trying to do deals with Amazon, they were trying to do deals with Best Buy, which I think they have those things now on their website. And the stock just went completely crazy. So from those 10 bands, I think each one of us made like 40 or 50 bands. And then we just kept on accumulating. I think in 3.5 weeks, I think we each had like 90 something thousand dollars in our account, and I believe back then it was TD Ameritrade. And we were doing good. We were doing good. I told him, hey, I'm gonna take out 90. I think I said I was gonna take out like 85 or something like that. I'm gonna leave $5,000 and let's run up $5,000 again on a firm again. We did the same thing. We made another 100 bands off of those 5K in about 2 months, and then a firm came up with earnings, and me.
Hey
I just
yo.
I went with like the FOMO, complete psycho FOMO crazy. It was an insane trade for me besides Tesla and some of the stuff that I've lost in the past or whatever. But yeah, I put $50,000 on a zero DTE call. They had earnings on Thursday after the market, and the stock was $150 or something like that. And I had $170 calls expiring the next day on a Friday. I lost the whole thing. I lost 50 bands overnight.
Damn.
Yeah, and the stock did go up. The stock went up to $180, and this goes back to the IB crush, and pretty much is everything else that we talked about. The stock went up to 180 or 178 or something like that, and my calls were whatever it was. But it did that after hours because obviously earnings, they reported good earnings. But, you know, I wake up at 4 o'clock in the morning because I want to see where the stock is at. The stock was already at $168 and my strike was 170, whatever it was above that. And I'm like, damn, what the hell? Why did it go down? Insiders started selling. There was a shit ton of selling. Keeping it short, the next day, I even thought about averaging down on a zero DTE call. And I'm glad I didn't do that. But yeah, 50 bands down the drain. After that, since I was already kind of psyched out, I was revenge trading the next week. Uh, Tesla beat my ass a couple times. Spy murdered me. So yeah, I think it was all the way up until Wednesday that I found. I think at that time, I think it was Charge Point. I think it was Charge. That's the one that I was talking about. That it's they do batteries for Tesla. I think, right? Or no, for Neo or one of those companies. But they do lithium batteries or something like that. And that stock went crazy, and I made some money back from there. But in that time frame, I think I lost almost the whole 100 bands just in 5 days or 4 days, just from revenge trading. So yeah, it goes like that. And I've shown Nico like some red days that are a couple of six figures red in a couple of days. I'm not exaggerating. It's real.
On the
You got to talk about your
man.
losses. Yeah.
On the man.
So some people might say, hey, why don't you invest in this and that? Well, next time I will. But you learn and you keep going, and it is what it is. That's why I said risk management, right? If you cannot risk to lose $500, do not go in without a stop loss. Still make the trade, but don't go in without a stop loss.
Facts.
So
My worst day ever was 44 bands. My best day ever was 36K. My
yeah.
best week ever was 84K. My best month, 108. So it's all depending on what you can do with the market and how you work it. You got to be able to adjust. These numbers that you hear is way different from anything else, right? It's not
where you can work a 9 to 5 and hear or see numbers like this. This is completely being able to compound and build onto your money and your wealth. So, but you got to work it like a business, right? You got to be able to manage it like a business. Just as quickly as you get it, you can't be trying to get rid of it, right? It's the same concept just in life. As quickly as we get it, we lose it just as quickly. But if you understand how to get it and you work it, once you have it, you understand how to keep it. Same thing with your portfolio. Understand how to make a small portfolio into a big portfolio. But that doesn't mean, boom, that's it. From there, be able to build onto it and be able to keep your money.
Yeah.
You don't want to just have 2 lucky trades that, boom, you were in it just like a GameStop run up. You want to actually be able to develop something that you can continue to do over and over repetitively so that it builds onto that.
Yeah. No, that's 100%. And just like we were talking, I remember what happened to me with Google. With Google, I got smoked for like 57 bands. And then the next day I got calls for 25 bands on PLTR, and I made it all back in one day, the next day. And I could have held it. I could have held it. I could have held PLTR because I had $102 calls. And as soon as I got even from the Google swing that I had on ER day, if I would have held it, I think I would have probably held it for PLTR to go all the way to $110. And that would have paid out probably 500% of the 25 bands. So I caught as soon as I made my money back. As soon as I made my money back from the loss of the 50, right now is at 57. No, 52,650. I'm still red on there because Google still hasn't made a move at all, and I still have till next week, which is probably not gonna happen. But the 25 bands would have what? It would have been 125 or 130, I believe, if I would have held it, probably more. But I was happy with getting my losses back from Google. That was my whole mentality going into that trade. So I followed my strategy. I remember, Nico, I didn't even talk about it like after. I think I talked about it once and then I let it go.
Yeah.
Yeah. So, I got into it, got my strategy, I followed it, and then, I made it happen.
Let those emotions kick in. You gotta follow your
Yeah.
trading plan fully.
um, but yeah, no, man. Like I said, you have to just gotta follow what you're gonna do, and that's pretty much it. But yeah, man. Um, we can do long term trades some other time. My wife is gonna grab me by the neck right now if I don't go out there. So, uh, yeah, we can catch up some other time, etc. And thank you guys for being here. Appreciate it. You're probably gonna see a lot more from me going forward.
Thank you, sir.
And yeah, no worries. And then we'll go from there. I don't think I posted it. I don't know if Nico, if you have, uh, are you doing this from your iPad, Nico? Or I don't know if he's muted or I muted him. I don't even know what the hell.
Oh shit, I was talking to. What you need? What happened? I'm on my iPad. I was talking the whole time.
Yeah. Now let me see. Hold on. I can share computer sound, pause, stop, share. So you guys can just kind of see that I'm not really, this is not all smoke, pretty much.
You get logged in. I could just pull up the picture. I got him, brother.
Yeah, if you can, because
Yeah,
I'm on the
it'd be
computer, so
easier.
I don't have
You don't gotta
any.
log in. Hold on. Let me make sure. Hold up. Up screen now. I can see screen. I can see screen.
Yeah.
All right. We just be putting charts in this thing, boy. Let's see. find it. Here it is. Oh, this is the Palantir, excuse me. Is this the down? Let me see if this is the one in your down. No, that's still Palantir.
No, yeah, that's it right there.
This
Well,
was
you have
the original.
Yeah, this is the original one, and then you have the other one right there, which is the PLTR, which is the one that made it back.
The comeback. Comeback is crazy.
Yeah. So I had the pump day 52, but still negative, open negative PL. Yeah.
And then we had Sin with 32K, 100%.
Yeah, that was a bang. That was a bang play right there.
Yeah. If he adjusted and did more out of the money so he loves at the money contracts. If he
Yeah.
adjusts to being out of the money contracts, this would have been at least from that same move, 150, almost 200%, and still would have spent less and made the same amount.
Yep.
So don't forget, you can always adjust your strategy in the way that you set up your trades.
I agree.
Any questions, guys? We
No, I
good
can
for
save it for another time, brother.
All right, perfect.
Yes, sir.
Y'all have a
Thank you, guys.
night. Y'all enjoy the remainder of your weekend. Don't forget, weekends are for studying. You can practice on the crypto market to get an understanding of your technicals always. We're always a student. Me and EC, we teach each other and we still go out and look for more information. It doesn't matter how far or how long you've been in the market, you're still learning, you're still adapting, you're still trying to make it as easy as possible when market is open. But y'all have a wonderful night.
Have a good night, guys.
You too. Good night, everybody.
Yeah.